Does Ford have the greatest company management on the planet? You might think so after today's show. Leadership is a big deal to me. I've seen it make or break companies over and over. And after hearing what Ford's leadership has accomplished, their vision for the future, and the valuation prospects for the company, my mouth almost started watering. Welcome to Investor in the Family Radio, a podcast about learning to invest. My name is Brian Bain, and I'm your host. At Investor in the Family Radio, we believe that you can become a great investor. How? By building the right plan and then sticking to it. According to Warren Buffett, that's what it takes to set yourself apart. And everything we do here is meant to help you get there. So thanks for joining us. And also thanks for putting up with my voice a little bit today. I'm just now recovering from a little bit of a cold. So thank you for your patience there. Know that you can always find more at investorinthefamilyradio.com. And you can subscribe to the podcast at iTunes, Stitcher, and the Google Play Store. And if you'd like to join me on the path to becoming an intelligent investor, simply text the word JOIN FAMILY. That's one word, JOIN FAMILY, to the number 44222, or visit investorinthefamily.com and sign up, and we'll be sure to take care of you and make sure you don't miss a thing. And hope you enjoyed today's interview with the Dividend Sensei. Well, hey, Adam, welcome back to the show.
Thanks for having me back, Brian.
Absolutely. We've had some great conversations lately, and today I want to spend some time talking about Ford. And this is a company that I don't follow closely myself, so I'm really looking forward to hearing some of your analysis. Do you mind giving us a kind of a top-level perspective as far as why you like Ford right now?
Oh, sure. So, Ford as one of the, big three auto, Chrysler, now it's technically owned by Fiat, so I guess it's the big two American automakers. But, both Ford and GM, they were legendary for how they kind of screwed up back in the early 2000s, when the economy was doing well and SUVs were huge and gas was cheap, and they just made so much money off that they really didn't care about designing, good quality cars that they could sell internationally. They were just rolling in such profits that they didn't care about cost savings. That it's essentially efficiency didn't matter, design didn't matter, reliability was terrible. But hey, we're selling these trucks and making $20,000-$30,000 in profit off each one. So who cares? And then financial crash happens, and GM ends up going bankrupt with government's help. And Ford, they managed to do well because Alan Mulally, the CEO at the time, he took out a $20 billion line of credit back in 2006, and it was enough that Ford was able to continue operating throughout the crash. And then really the financial crisis put the fear of God into the company in terms of, we need to focus on efficiency. We need to focus on making good cars that people want to buy now. And that means, fuel economy is so that we can also export these, focusing on global platforms instead of, dozens of regional platforms that make it very expensive to, build and design new cars. And so, right over the years, basically now Mulally's gone, but under him, the COO was Mark Fields, and really he was kind of like he was the guy behind everything, his right Mulally's right hand, and so he's now the CEO, and I really like him in terms of both operationally, he knows what he's doing, plus in terms of vision for the future. And so from that operational perspective, Ford is they're working their way down to 8 platforms for cars across the entire globe, and so that's really huge. From
where, where were they before?
Let me check my notes here. I think it was something like 37.
Wow.
Yeah, it was nuts.
So that means that global platforms, can you flesh out what you mean by that?
Yeah, so basically it's just like the underpinning of the car. When you design it, it's kind of like how they say sometimes, like in Japan, you've got the A cars, B cars, C cars. It's in terms of subcompact, compact, midsize. And that's the thing.
Gotcha.
Like Ford and GM. That's the thing. GM, as an example, when they used to have 8 brands, and they would have essentially, a Chevy that was also essentially the same thing with a Pontiac and a Buick, but slightly different. So they had to retool the factories differently, and it was just a huge mess. And so essentially, Ford's they're getting it down to 8, and that's just the beginning. I mean, they're also working on other cost savings. They management thinks they can cut $3 billion between 2016 and 2018. And that's just, I mean, like an example of how they're doing that is like with a focus. Like in 2015, you could go online and you could personalize a focus, and there was a total of 200,000 combinations to choose from. And so that's now they're working down. This year it's down to 300. Next year it's going to be just 30. And management says that that kind of essentially smart customization could save them as much as $300 per vehicle. And for a compact car like that, where the margins are really thin, that's a huge improvement.
So they've dramatically reduced the number of customizations for some of these cars, which also significantly reduces the complexity of making the cars, which therefore significantly reduces costs as well, and boost quality, I'm assuming. Oh
yeah, their reliability is really. I mean, I was surprised how if you look now, they're above average. In their last initial quality study for 2016, they averaged 102 problems per 100 vehicles, and let's see, back in 2007 it was 221. So, I mean, they've more than doubled their reliability over the last decade. And that's the thing. I expect to see that continue to improve, especially with, Ford's management says they're going big into 13 different electric cars and trucks over the next few years. And that's the thing is like electric cars, they're famous for having less moving parts and being much more reliable. For example, Nissan says in their tests that it appears that their electric motors used in the Nissan Leaf electric car are 20 times more reliable than the internal combustion engine in some other subcompacts that they base it on.
Interesting. Yeah, so let's talk about. So we have looked back at Ford a little bit and talked about the really poor really the theme has been management, really poor management in the 2000s. Alan Mulally came in right after the financial crisis and did a really fantastic job of turning the company around. And then he handed things over to Mark Fields. And those two guys together have helped accomplish what you've been describing and have taken Ford from near bankruptcy to being a really high quality standout company. So talk to me about a little bit, and you've already shifted there a little bit. Let's talk about where's Ford going now and how. So it's been great to have been invested in Ford the last 6-7 years. Is it still a good investment, and why?
Well, so that's actually the point of my article that when I was researching it, I would have thought the same thing as you, that if you bought it back in 2009, 2010, right after the financial crisis, hey, it's up now, but is it still going to go up? But actually, it hasn't really moved much. And basically, in the last 5 years, both Ford and GM have been completely flat and haven't gone anywhere. But so that's the thing is that if you actually look at it, in terms of valuation, they're priced as if they're going bankrupt, but they're reporting record earnings, and they're, just like billions in net income and free cash flow, and in terms of growth plans for the future, for example, that's really what excites me about Ford, because one of the big concerns people have is, ride sharing like Lyft and Uber, and is like, what's going to happen when we have, autonomous cars, and basically these things can be like, robotic taxis and just kind of circling the neighborhood 24/7. And, what if people don't need cars at all? And car sales just start to, go into a secular decline. But so Fields is, he's jumping out in front of that. And so he's, started the Ford Mobility, and, they're investing in like bike sharing and autonomous vans, and really just kind of getting ahead of the problem and working on their own autonomous solutions that they expected about 2020, they'll have something ready for Uber to work with. And then by 2025, they'll have it ready to go at the consumer level, because they want to really focus on getting it right and making sure it's reliable, and making sure that it's, it's level 5 autonomy. And basically there's 5 levels of autonomous vehicles, with, 1 being kind of just like lane guidance that we have. And then 5 being you can drive across the car can drive itself across the country. So Ford is basically saying, hey, by 2025, we'll be able to sell those to consumers. By 2020, we'll be able to sell them to fleets like Uber and Lyft. And then in terms of, investors might want to know, yeah, okay, so you might get ahead of it and it might help you in the short term, but what about if, the number of vehicles sold in the world ends up getting cut in half or, just to 1/3? And so Ford basically says, well, then the plan that they have over through about 2030 is they want to they want to keep buying additional like data companies. They want to keep gathering the information. They want to essentially become the managers of these fleets for the likes of Uber and Lyft and so on. And so the idea is that according to management, that kind of industry is expected to grow to about $400 billion a year. And so if they can get ahead of that and grab some good market share, that might be more than enough to offset any losses in sales. And in fact, Ford, if it became just like an entire transportation company, like imagine if Ford were to just have its own version of Uber and had just like a subscription model where they have robotic taxis that you just subscribe to and you can order with an app on your phone. That theoretically that could mean higher revenues and higher margins than what they're doing now, just building out the cars. And in fact, that management's looking at saying that they're looking around 25% operating margins on their mobility segment versus around 8% for actually building the vehicles.
And when you say mobility segment, you mean you're describing that manager of autonomous fleet type stuff? Yeah. Wow, so that could mean 25% margins as opposed to current around 8%.
Yeah, so basically you can triple or even quadruple the margins because they said it's 20 to 30. So it depending on if you get economies of scale, you could get 4 times the profitability and on potentially even about the same sales or even higher.
And just make sure. Oh, sorry, go ahead.
Oh no, that was it.
I want to make sure I heard you correctly earlier. You talked about Ford investing in ride sharing, and then you also said bikes. Is that correct? Or
yes.
Did I misunderstand you?
No, they're in San Francisco they bought a bike sharing company, and essentially the plan there is that they're going to be renting out the bikes, and as they see essentially, the people who rent the bikes, they'll be navigating the city and they'll have GPS tracking on those. And so for the logic behind that is they can see what's the most efficient way of moving around the city at different times with traffic patterns. And then they can use that for their autonomous vehicles as well as autonomous like cargo vans and buses and so on.
Okay, the way you just described Ford and their vision for the future makes me want to go buy Ford right now because I said I wasn't very familiar with the company overall from an investor perspective, and I'm not, but I do know a fair amount about Alan Mulally and the work that he's done and Mark Fields from a leadership standpoint, and I've been very impressed by that. And so that past performance has been really encouraging to me, but the way you just described the future, it excites me because that sounds like a company who's getting ahead of the curve. I did an interview with someone on Intel recently, which is the complete opposite of that. A company that got big, was doing great, and really just set on their success. Well, I guess like Ford was doing back in the 2000s and is really paying the price for that. Intel, that is. But Ford, here's a company that, they're thinking like you'd expect someone like Google or Amazon or Facebook to be thinking in terms of innovation and being ahead of the curve. That's pretty cool, especially for an old school Detroit automaker.
Oh yeah, that's the thing. If I compare almost his vision. It's not nearly as expansive as maybe Elon Musk's over at Tesla, but Mark Fields has very similar visions in terms of like where he wants to take the company. And and unlike Tesla, Ford pays a really nice dividend over 5% that management says will they'll be able to sustain that through the next downturn in the industry in the next recession, and they actually have data to back that up. They do an annual stress test to see whether or not they would be able to keep paying the dividend and operating the company and keep redesigning their vehicles and moving forward with the plan. So that's the thing, I like that really impresses me.
And so a lot of these specifics you've mentioned about their future plans, this is all stuff that Fields and Ford have directly revealed, or how much of that is like subjectivity and speculation?
Oh no, this is all stuff that they've already talked about, that it's like in their investor presentations and in conference calls.
Do you see other, like, is GM having similar conversations, or do they still seem like they're behind the curve?
Oh no, so I actually own both Ford and GM, and I like them both. Actually, I just checked, and based on my valuation models, both Ford and GM are around 85% margin of safety. So they're the two most undervalued quality dividend stocks I've seen so far over the last 3 years. And so GM they're also doing a great job. Mary Barrera over there, their new CEO. She's on top of things as well. So GM actually bought a 9% stake in Lyft, and basically they were actually, when the Chevy Bolt, the new EV that they just launched or are launching right now, they actually designed that around being able to become autonomous and well, not initially autonomous, but in terms of partnering with Lyft, in terms of having the most usable passenger volume, the easiest to get in and out of. Basically they designed it kind of like a London mini cab that, is kind of like a small minivan hatchback kind of style. And they're working as well as, making it, they have their own autonomous labs and working on making self-driving cars. And then it's like GM just announced they're actually also going to be selling also to Uber. And Lyft's okay with that. So it's kind of like they don't really, even though they own Lyft, or 9% of it, and which I think is a solid investment. But really, I like the idea that, hey, we're going to be, we'll sell to everybody, and we'll just go ahead and have the autonomous things. And it's not in terms of maybe as specific as Fields and how his master plan to essentially take over the being the fleet manager, but in terms of what GM is doing and their plans for the future, as well as their push into EVs, which that's essentially, that's just the future of technology. Whoever gets EVs right is going to basically own the future of automotive transportation. And so I like both what Ford and GM are doing in terms of using their North American operations as their cash cows, using the trucks while gas is cheap, getting that cash flow, investing in the future, getting like, how are we going to sell electric to Americans? Well, we're going to put into trucks because they have instant torque. And so the same thing with reliability. Truck owners need, trucks are supposed to last 20 years. Electric trucks will last 30 years. And so that's the thing. Both companies are really, they are completely night and day different than the way they were back in the 2000s.
Well, you made a comment a while ago. You said that both Ford and GM are around an 85% margin of safety. Could you explain what you mean by that, just to make sure you mean, like, I'm understanding you?
Oh, sure. Yeah. So the margin of safety, that's just essentially like, the value investing Buffett concept that, hey, it's like the intrinsic value of this thing, it's like, hey, it's double what the current share price is. And so even if it basically it's kind of like use a discounted cash flow analysis. And there's a lot of assumptions based into that. And of course, you're not sure about the future. And it's like, hey, over the next 5 or 10 years, how are trends going to play out? Are we going to have a recession? How are car sales going to do? Are we going to be able to execute on that cost basis? So really the idea is, if the margin of safety is big enough, it really doesn't matter, what your, guesstimates are about the growth rates and about the discount rates and interest rates and all that stuff. Because if it's just that cheap, then it's essentially as close as you can get to a sure thing in the stock market.
So, and when you say that both Ford and GM have about an 85% margin of safety, would that be safe to say that you think they're valued at about 15% of full value?
Yeah, that's what I just did the numbers on GM because I'm writing an article today about that. And basically, even on a conservative growth assumption, I'm looking at GM, and it's just like, oh, they're worth about $200. And they're trading at 30. And so it's kind of like, you look at you look at that dividend, and it's like, okay, so the dividend, it's secure. is going to survive the next recession. It's likely to keep growing. They're buying back shares. That's great. They're moving towards the future, cutting costs, doing everything they need, and it's worth 7 times what it is worth now. And it's just like, okay, well, that's that's time to pack up the truck and mortgage the house and.
So what do you have Ford at if that's the case?
Well, so Ford is let me check my notes here. Okay, so this for Ford, my conservative fair value would be 53.12, so that's about 77%. Now, analysts are saying that it's going to grow at 15% for the next decade. I think that's that's a bit on the optimistic side. That's best case scenario. If it's true, it's worth 98, and so that would be basically it's trading at 12% of what it's actually worth. I think it's basically trading 70. So that's 23% of what it's worth.
Yes. So you think Ford conservatively is worth low 50s?
Yes.
Okay, so you just went through and you talked about how both these companies have an 85% margin of value, meaning they're valued at around 15 or so percent conservatively, and that despite the fact that they hit rock bottom at the financial crisis and have really been doing amazing stuff and knocking it out of the park since then, for the most part. Even so, their stock valuations have been flat for the last couple of years, and the reason they've remained flat is because people are really worried about the future of automobiles and automated vehicles and all that kind of thing, and a significant reduction in car purchases. But then you've described, those are all real concerns, but Ford and GM both know that, and they are taking action now, so they'll be ready when that happens, not just so they don't get hurt by it, but so they can actually capitalize on it. And for that reason, while it may be really frustrating for Ford and GM investors over the last few years to see that stock price stagnating, you're basically saying hold tight because the value is there and it's coming. Does that sound fair?
Yeah, I mean, basically, as they say, the market can undervalue a stock for a long time, but they can't stay stupid forever.
Awesome. Well, Adam, this has been fantastic. Thanks for coming and spending some time with us today.
Oh, thank you, sir. Always a pleasure.
Well, hope you enjoyed the interview today with Dividend Sensei. Remember, you can get full show notes with links and other details at investorinthefamily.com. And don't forget to subscribe to the show at iTunes, Stitcher, or the Google Play Store. And if you want to join me on the journey to becoming an intelligent investor, a better investor, simply text the word JOIN FAMILY. One word, JOIN FAMILY, to the number 44222, or visit investorinthefamily.com and sign up. And we'll make sure to take care of you so you don't miss a thing. This is Brian, and thanks for joining the family. The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.